Personal reward. What are the personal rewards for using at least one IUL for wealth accumulation? Whereas growth potential simply cannot be fully realized with perpetual contribution restrictions, the customizable, only temporary annual contribution limit relative to cash value life insurance allows for greater contributions and corresponding growth potential than most retirement vehicles. Whereas prior gains can be lost with market risk-bearing vehicles, IUL interest credits are preserved, locked in, despite market weaknesses. Whereas tax-deferred distributions are typically reported annually to the IRS, IUL distributions are not reported to the IRS as long as there are no excess contributions during the first 7 years, and as long as the contract is not canceled or allowed to lapse. The Tax and Interest Workbook demonstrates that consistent contributions of $6,000 a year could grow to over $13 million in value and monthly tax-free interest income of over $136,000, the result of a total investment of $282,000, funded not out of pocket but by excess tax and interest costs, and permanently risk-free tax-free compound interest of over $13 million. Revisit the Tax and Interest Workbook and recalculate your monthly savings and retirement account and distribution values. Enter $500. $6,000 divided by 12 equals $500 in the green box for Savings Budget on tab 15, the Monthly Savings Schedule worksheet. If it is greater than $500, use the monthly amount of the total differences between the annualized federal income tax and self-employment tax calculations you make using the Excel spreadsheet containing estimated tax calculators accompanying the fourth session. View the bottom half of the schedule, below the bar in the middle of the page, for the monthly and annual results. Save the spreadsheet workbook under still another new name for your latest calculations. Still another reward for using at least one IUL is that your wealth account value will continue to participate in the general upward movement of the market, but not in the various downward movements of the market, meaning that your interest rate will not decline suddenly and drastically if and when you retire. Using an IUL, $1,536,000 at age 66 would provide an annual six-figure tax-free interest income for the rest of your life. For example, if your wealth account value continued earning 12% based on the index, your $1,536,000 would earn $184,320 each year, which you could receive as a monthly tax-free distribution in the amount of $15,360. This amount would significantly increase if you also steadily depleted your wealth account value, say to age 100, and based on your application choice, your heirs and beneficiaries would still also receive the face value of the policy tax-free. Certainly one of the most valuable rewards for using at least one IUL is the additional benefits provided by an increasing number of life insurance companies. Up to capacity, the latest IUL contracts feature not only death benefits for surviving beneficiaries, but also post-career income and/or accelerated chronic, critical, and terminal illness benefits for living insureds. In major health events such as heart attacks and strokes, such IUL contracts provide the option to accelerate some of the total death benefits and receive cash to offset the associated extraordinary healthcare costs. Email your first name, state, phone number, and the best time to reach you with remote assistance in establishing one or more IUL or Roth IRA IA permanently risk-free tax-free compound interest-bearing wealth accounts. No salesperson will visit. Market risk. Does market risk need an explanation? The foregoing comparison of retirement vehicle categories makes the only point that needs to be made about the third principle for achieving financial prosperity, avoidance of market losses, which hardly needs any explanation. Most, if not all people, would readily agree that the need to avoid loss of wealth due to market adjustments, corrections, and crashes is both obvious and essential for accumulating the greatest possible amount of wealth. However, thinking only of risky rather than safe ways of participating in the market, many people choose not to participate in the market at all. Typically, they thus prevent themselves from ever achieving any real, enduring financial prosperity, since efficient application of the Rule of 72 cannot be enjoyed without participating in the market. Nevertheless, the highest available interest does not provide efficient application of the Rule of 72 because it is subject to potential losses due to market risk. The best available interest, indexed interest, provides efficient application of the Rule of 72 because it is not subject to market risk. Based on participation in the general upward movement of the market, interest is periodically credited and preserved, and there is no participation in any downward movements of the market. Guarantees for wealth and prosperity. What are the guarantees that these recommendations will in fact help you generate the kind of wealth and income demonstrated? By establishing either a Roth IRA IA contract or at least one IUL contract, you are taking advantage of not only synergies that facilitate and principles that magnify, but also guarantees that secure the accumulation of wealth. Have you identified all four governmental guarantees? The first guarantee gives you the ability to make legal arrangements to avoid income tax while you work for your money, even if you live in a state whose legislature has established all three elements of the essential statutory formula for income tax, or in a state that collects income tax regardless, and literally fund your wealth account with the savings you realize. The second guarantee gives you the ability both to participate in the gains of the market and to avoid losses in the market while your money works for you, so that you retain 100% of your investments and 100% of your gains and never lose even a penny to market adjustments, corrections, or crashes. The third guarantee gives you the ability to avoid income tax while your money works for you, so that you retain 100% of your wealth account value and 100% of your distributions from your wealth account value and never lose even a penny to income tax. The fourth guarantee gives you the ability to earn the best available interest while your money works for you, so that your wealth account value has the highest possible frequency of growing 100%, the best possible potential for periodically doubling in value. Compared to simply going with the flow of the herd mentality, you take advantage of the guarantee for lawful diversion of income tax costs to your wealth account by exercising your constitutional and lawful rights and privileges relative to operating through a private, lawfully income tax-free organization. Compared to a traditional fixed or variable interest strategy, you take advantage of the guarantee against wealth account depleting market losses by using an index interest strategy. Compared to taxed financial products, you take advantage of the guarantee against wealth account depleting and distribution depleting income taxes by using the kind of financial institution that provides life insurance and Roth IRA annuities. Compared to risk-free, low, fixed interest, or risky, highest available variable interest, you take advantage of the guarantee of the best available interest by funding either an Index Universal Life or IUL insurance contract or a Roth IRA index annuity or IA contract. A fifth guarantee gives you the ability to add to the number of times your wealth account doubles in value. It is generally considered the responsible thing to do, the course of wisdom, to set aside some of your own money for the future. Compared to using only your tax costs as funding for your permanently risk-free, tax-free compound interest-bearing wealth account, by contributing your earnings in an amount equal to the amount of state and federal income tax you lawfully divert to your wealth account each month, effectively doubling your wealth account contributions, you can guarantee yourself that your account value will double in value again at least one more time before you begin taking tax-free distributions. Revisit the tax and interest workbook and recalculate your monthly savings and retirement account and distribution values. Enter $1,000, or twice the amount you entered for your previous calculations, in the green box for Savings Budget on tab 15, the Monthly Savings Schedule worksheet. View the bottom half of the schedule, below the bar in the middle of the page, for the monthly and annual results. Save the spreadsheet workbook under still another new name for your latest calculations.